And to me, this thing is going up consistently, even with the current extremely uncertain and extremely visibly uncertain state of the world. To me, it definitely reads, I'm not sure if bull market, but it definitely reads like a sign of degeneracy, basically. So I'm wondering if this is like, if people do perceive this as a leverage angle on the crypto market, I wonder if this is how they're expressing it instead of going like 10x on a DEX or some such.
We're live. Welcome back to another episode of the Spelunking podcast, where three people prepare very poorly or don't prepare at all, and then
come on, man. We just had like 3 minutes of prep. Come on.
At the end of which we were like, yeah, we don't know, and then and then we turned on record. So really, like, I think I don't know if this is a good thing, but this is the podcast is certainly very like stream of consciousness. Like, this is pretty much exactly what our real conversations would be like, very unthought out. But I do think we've exceeded ourselves this time. I managed to write 4 words down in my notes from our prep, quote unquote. Anyway, but we did have a direction that we established that we would go in, which is the market is weird. Specifically, we like want to chat about Circle. So I mean, for people who've been living under a rock, Circle IPO'd. By all accounts, like in every possible way, it has gone so much better than expected. In fact, their valuation, at least yesterday, was like very close to the valuation of Coinbase that gets most of Circle's profits, which is confusing to say the least. But yeah, should we start with Mika, since he's probably going to have like an actual good take on this, and then we can
that's something you should never say. It's like saying to a comedian that, oh yeah, the next joke this comedian will tell is super funny, and then the audience is like, oh really? Let me see that. So
I'm building Mika up so that me and Ricardo can sound better in the conversation.
Yeah, you have just been pushed under a Circle bus, man. Go ahead.
The expectations for me and Ricardo are so low, we can only exceed them, and they're so high for Mika that he's bound to fail.
So I guess where I'd start is kind of, if you think about what a bull market looks like, Circle IPO going this well is kind of would be a very, very classic sign of that, that there is sort of some areas of the industry for which there seems to be essentially infinite and irrational demand. And this one, there's no way to justify it, I think, either. Like at these price levels, it's pretty much that. And I guess the interesting part is like Sol has to double to get to all-time high. ETH has to double to get to all-time high. The altcoin market, like BTC others, ratio just keeps kind of going down, down, down. So it's weird that there is something about the market which is like very, very hot and kind of like bubblish in a sense, but then it's very, very concentrated to these like a few instruments in the industry right now. And I think Circle is a good example of that. A good example of that dynamic.
Can I ask you a question? Do you think there's sort of similar dynamics at play with Circle and the treasury accumulation companies? Because there seems to be this thing where the things that have hype are crypto things trading in the traditional markets and not crypto itself.
So partially yes, though there is a difference. And the partially yes bit comes from, if you think about like, okay, there's a lot of money coming in the industry, and like previously it's gone like BTC, and then it's gone like further along the risk curve, and then the market itself kind of adjusts very well to that by just producing endless amounts of supply. And I think the kind of classical place where the demand has gone previously especially kind of from retail investors, the altcoin landscape, that one, like the supply is still there, and in a sense, it's like hard for it to produce, hard for it to anymore like restrict the supply in some sense. But in the trad markets, there is still this element of supply restriction, which is that if you want to get into the industry, there's only like a couple of these bets, even though there are like treasury companies, they're like pretty shitty ones on average, and they're not really like overloading the market with supply in a sense. And so MicroStrategy and then Circle and even Coinbase stock actually kind of being the top options for, okay, they operate in a market which hasn't been overcrowded by supply. The market is trying to overcrowd it, but it hasn't like succeeded in it yet in a big degree. And that kind of same bubblish dynamic you can see in these stocks so far. I don't know if that answers your question, but it's kind of like this supply demand thing, and there is a clear source of demand as well, which is like more, I guess, traditional asset allocators putting into this industry, and then what they can and what is easy for them to buy is like Circle.
So you think, just to summarize that back to you, and you can correct me if you didn't mean it this way, but basically like crypto retail, like there's oversupply for crypto retail, like basically because it's just so easy to like launch new stuff, and they're like, there's an
and so much has been launched as is kind of already in the market to absorb any demand that may come in.
Right. And so then you have this kind of like crypto retail is like stretched really thin because there's like too much stuff for them to participate in, and it's probably like a relatively constrained size. It doesn't, the size of the sort of like crypto investors that would do altcoins probably doesn't grow that quickly, unless there's like massive spikes. But then in sort of TradFi markets, because there are these sort of like artificial regulatory, all kinds of barriers to entry, you just don't have supply, and so then everyone crowds into the same like single thing that's available. Is that,
and the place at which they
are the investors different, or do you
they are
there's a lot of overlap?
They are slightly different, probably, at least like compared to like the kind of retail market of the last cycle. But to add to that, they kind of the point at which they are in their journey is one where they're looking for some type of crypto exposure. Maybe happens through BTC ETFs or something like that. And I think Circle is a part of instruments like that. And they're not in the part of the cycle where, or not in the part of their like journey where they would buy like Aave off the market. They're going to buy Circle, and and buying Aave off the market, which conceptually can offer like similar things ish in a portfolio, and you could argue has like better finances and stuff like that, where the valuation could be more justified. They're just not at a place where they're going to do that trade, and they're going to make the Circle trade instead.
But there's then an argument to be made that if Aave was somehow brought to the traditional market, you could have like the, and maybe it's by treasury companies, or maybe there's some other way, but like basically there is this like untapped demand that seems to be like quite hyped as compared to like the crypto people.
Yeah, and it's a one that's difficult to fill. I would say like perhaps the most interesting case you could have here is something like Uniswap Labs IPOing, where the Labs entity itself IPOs, and whether or not that would be able to generate like a lot of demand from investors. Like if that like by this hypothesis, it kind of would have like it would be kind of more successful than what you would do if you actually, ironically, for the first time, if you ICO'd at the same time. Like if Uniswap Lab, there was like no uni token in some sense, and you could like run this playbook from the beginning, and you could run two universes where one you ICO, one you IPO. We right now like live in a world where the IPO does better. So that's probably like a good sort of thought exercise around this.
Yeah, I agree with that. Ricardo, what do What do you think is going on?
I mean, those are good points. I have been looking at it from a slightly different angle. One of them is that if you're just an average retail investor, chances are that this looks like a, let's say, safer bet from, not from the does this make any sense, because they're likely not looking into Circle's financials, or they will be horrified by a, what is it, 3,000 price to earnings ratio, that about 2,000 something right now.
But you don't need to look at Circle's financials to know that 2,500 PE ratio, like that's first spread on your Yahoo Finance.
Yeah, but no, but my point is that a lot of people might not even be able to know how to parse this. And what I'm referring is this doesn't look like a safe bet from that point of view. It looks like a safe bet in the sense that you get exposure to crypto stuff without having to deal with wallets, with, am I going to get rug pulled or something? This, generally speaking, looks like something that they can parse more, which also might be why these things are likely appealing to funds, like more traditional funds who want some crypto exposure, are willing to make like large purchases, but don't want to have to deal with token custody or with a lot of the, let's say, research that for them looks strange, right? Like if you run a fund, you probably know how to look at PE ratios, you know how to look at insiders, this kind of thing. You might find weird that having to do research on lock schedules, and if the team is going to dump on you, or if there's some hidden wallet somewhere holding a large chunk of this kind of stuff, right? So it might seem less threatening as well. But also
I have a question quickly.
Sure.
Do you think people just fail to understand Circle's business model and they look at Circle's USDC market cap and are like, clearly the company should
absolutely,
because they're like very close, within 4 billion.
What, Circle and Coinbase?
No, Circle, the market cap of Circle, the company, is about the same as the market cap of USDC.
Yeah. No, I'm fairly sure that there's some people that think this is some sort of dollar hoarding treasury thing or something.
But
like
if Circle trades with a premium to the NAV, you could, in theory, issue more shares and create more USD out of nothing to increase the USD per Circle shareholder, and thus you have a flywheel effect, which you could create.
I really don't think that people are.
There are regulatory things which kind of prevent that a little bit, but isn't that like an absurd thing that USDC supply is about the same as Circle's market cap? Like that.
Yeah. I mean, if you consider that they make
like a fundamental misunderstanding of how the business model works, or it's just what Mika's saying, like it's almost like ETF, like just bang, there's something.
I don't think there's no price sensitivity to this thing. No one who runs an analysis on this thing would ever like buy it, like actually, but it's also like you can always make the analysis if you work at like an investment firm and someone in the partner level has an idea that stable coins are big. I, as an analyst, surely am able to manipulate the numbers in a way to make it seem like this is something that we could buy, or I could manipulate the story.
2,500 PE ratio.
But like, I think that kind of overestimates that overestimates the level of like just. When you feel like buying, you will make the report fit the thesis in some sense, and I think that's very easy to make actually happen, and easier than kind of people think that these things are based so rationally. And Circle is actually in a very good position here because unlike the ICO market, this market is super difficult to oversupply. Just definitionally in some sense. So what that means for practice is probably that we will try but it will take like a lot of heroic efforts. And actually, the thing you mentioned is kind of interesting. Is are the treasury companies one way of trying to basically take Circle's flow? That's probably true. It's just so hard to make like convincing, just in that way. I think in some sense, to actually like compete against like quote unquote like real business Circle. But
well, one other take I had, which is more like this maybe not what happened, but this sort of smells to me like a high FDV low float strategy. And I wonder if they've kind of taken the learnings from token launches and just brought them to TradFi, and like kind of no one's really done it in TradFi, you know, like they're just not, I don't know, they're old, they're used to like companies being valued based on reasonable things, which obviously hasn't been true since like 2008, but like they're still living in that world, they're still thinking about stuff from that perspective. And like this started to break with like GameStop and Robinhood and all this shit, right? And I don't know at all. And there's probably, I don't even know if this is legal, but it's like feels like the way to actually achieve this would be to have very low float and then to orchestrate buying, and basically like benchmark people to a, like kind of similar to like benchmarking some people to a NAV multiple, benchmark them to some kind of like market cap to USDC supply ratio. And the crazier you manage to make that kind of baseline benchmark, the better it is for you. And the better it is also for every other company. But then the flip side of that, I think, is the kind of like, and this won't happen immediately, but like the moment crypto people understand that there's like a game here to be played, where you can, you know, benchmark to crazy valuations, like basically that's the crypto game in a way for a lot of token projects, is going based on like comparative valuations to similar things as opposed to anything regarding the underlying utility or revenue. And like when crypto people figure this shit out, like from Circle, like it's, I think the speed to supply the market with more is going to be quite substantial. Crypto people have had a lot of practice. They're pretty degen. And so like, I feel like it'll happen, but then it slowly would kind of eat away from that, I would imagine. Unless you then have a corresponding kind of rise in, like if USDC like starts approaching Tether or just in general grows a lot, then that kind of like supports all the valuations down the chain. But I don't know, like is that crazy?
That kind of that no, it's not that, and it actually does connect with a point that I also wanted to make, which is that, and by the way, it's not just Circle. Like Circle is absolutely insane, but I think Coinbase just hit like a 52-week high this week. So the whole market of crypto things is crazy.
Coinbase trades at like pretty normal P ratios.
I know. Coinbase is
like we're talking 1/3, 1/4 of Nvidia. Like that's not a crazy ratio.
Coinbase like is at the 2x the P ratio of Apple right now, 66 versus 33. But what I used to think of Coinbase back in the last cycle as kind of like leverage Bitcoin up to a point. And to me, this thing's going up consistently, even with the current extremely uncertain and extremely visibly uncertain state of the world. To me, it definitely reads, I'm not sure if bull market, but it definitely reads like a sign of degeneracy, basically. So I'm wondering if this is like, if people do perceive this as a leverage angle on the crypto market, I wonder if this is how they're expressing it instead of going like 10x on a DEX or some such.
Can you expand on your previous point?
Yeah, sure. No, what I meant is that if I knew some people crypto adjacent, not necessarily, or they knew about crypto, but weren't holding crypto in the last cycle, And the consensus was that Coinbase was a good way to get exposure to the crypto market without actually ending up having to hold crypto, and potentially with a return multiplier. Right, for them, it was an equivalent to what would be for a degen making a 20x bet on a DEX. And we've been generally talking about how the retail market doesn't seem to be as active on the token space. So I wonder if the people who before have done like a degen move or tried to do a degen move on a DEX or something are actually expressing the degen move through this sort of pathway, because frankly, Circle, who gets all of its income pretty much, except like redemption fees or something, but pretty much all of its income is based on the U.S. interest rate. They have an U.S. president that's screaming at the Fed that they need to cut interest rates, which is directly going to cut into the gross revenue that Circle gets, while at the same time Coinbase is getting the majority of that revenue, and they're trading at a 40 times the price to earning ratio of Coinbase, who actually has other businesses and multiple streams of incomes, and it's an established company, while the dollar price is continually slipping against other currencies, and countries who are rumored to at the very least have nuclear material are too intent in bombing the shit out of each other. That speaks to me that smells as degeneracy.
So, yeah, I mean, so just a quick take on that. So sort of like, I feel like that if you kind of take Mika's point of like, we've sort of oversupplied the crypto retail investor and like it's sort of spread too thin, that creates this problem within crypto of sort of lack of exit liquidity, essentially. And the other way to maybe think about this is like people see an opportunity in this market to regain exit liquidity. And so like you can't be a degenerate if you can't get out of your position. And so there's sort of like more confidence that you'll be able to get out of your position. And so pump and dumping Circle kind of like makes sense. And I think the same thing happens with the treasury companies. It does feel like a lot of that like activity that used to cause wild swings in the underlying cryptos has moved into sort of the regular world. And maybe like the really cynical take is just like maybe crypto investors think the TradFi investors are dumb and they're gonna eat it up, right?
This is a particular one where stablecoins are kind of very palatable as a story to TradFi as well. It kind of perfectly hits their weak point where it's like, oh, we have to be part of this innovation. Like Besant is talking about this on CNBC. It feels, oh, it's not as scary as all the crypto stuff. It kind of perfectly hits the notes for like TradFi to get hurt in some sense in taking position when they take crypto positions, and then it's something they'll regret kind of down the line. So it's kind of, it has the story and the aura that is like, you don't get fired for buying it. But it's not just that like Ricardo was earlier talking about when you go to token supply, you'd have to look at so many different things. But it's not even, it's so much more basic than that, which is just like, it's on chain, we can't buy it. Like we won't do the due diligence. Like it's the scary part of crypto that is not cool. We do the adult cool things because we're smart, real institutional people, right? And that kind of that mentality will hurt them. And this is kind of like a classic trade where like these guys will get killed.
Yeah. But I do wonder, like, if we've sort of oversupplied and burned retail, and I say we as sort of like collectively, we as the industry, and like there's not like this huge influx of new retail coming in, and now we oversupply and burn institutional, like what's left? So I do think there's a sort of nihilism about how the crypto industry grows and moves forward, which is sort of like just, and this isn't intentional, right? Like no one is sort of purposefully creating it. There really is no one holding the strings in a sense. But it is sort of what the outcome seems to be. So I don't know. We'll see. These things always take a long time to play out. One other take I had on this, which I think I mentioned to you, Mika, on Telegram, is I think if you were to like just take out like the top 5 crypto assets, and even you could include some from there, and you looked at everything else, you would probably conclude we're in a bear market. And so one sort of hypothesis I have is that maybe we are in a bear market, but Bitcoin finding kind of product market fit as this sort of global store of value is sort of messing with that dynamic. So it's much harder to read. So like Bitcoin being so high kind of like supports stuff a little bit under it. You don't get any exuberance really, because it's really just this kind of support, because that maybe just stems from historically, like when Bitcoin has been high, everything else has been high, and so people are kind of like trading it based on that. But then like really nothing else looks like full bull market stuff, even though Bitcoin price action should kind of mean that it is. And so if there's this kind of decoupling going on, there could be a weird moment where sort of like in a sense Bitcoin is not in a bear market, but everything else is. I don't know if you guys have any takes on that.
I mean, I hear what you're saying, but and this might just because this might just be my perspective, because I don't really check a lot of like junk, right? But the stuff that I do check, even the stuff that is not like on the top 10 kind of things, I wouldn't say that they're in a bear market. The charts look just like things are relatively stable, stagnant, but it's not like the most of these things keep slipping. I mean, Solana, which hasn't performed anywhere near the way that it performed on the last cycle, has been pretty stable, right? So it's I don't know. I mean, Sui Sei was picking up as well. So again, this might just be the stuff that I look at.
But these are really small. So like I think the way to sort of look at this from a broader perspective would be to look at things kind of like outside the regular crypto hype bubble. So I would look at things like, you know, Bitcoin Cash, Tron. I mean, Tron has done all right. Litecoin, like stuff that you would expect. Yeah, well, junk with a lot of volume and a high FTV. Yeah, like I wouldn't buy them. I'm not saying that, but like historical kind of bear markets have always led to things moving, those kinds of things moving too. And like Litecoin, bull market, but like Litecoin is like flat. Bitcoin Cash is flat. What else would be like? I don't know. I guess Monero might be a good one. Okay, Monero is sort of lower than it was in 2018 peak. It's done okay, I guess. I don't know what else. Like Polkadot's pretty flat. You know what I mean?
The like kind of inverse case of the Circle one, which is that the market is so oversupplied that there's no way for the entire market to just catch a bid, or it's very difficult for the entire market to just really, really catch a bid and make everything go up. So if you look at like the outperformers here, that's like Hype has done pretty well. There's a couple of DeFi projects that have done really well. And what actually makes them go up is really like a forcing function that they have in the protocol, where the protocol is successful enough to generate enough money. But that is not enough. Like you can't even like just run something like a PE ratio on something and be like, okay, this is going to go up. It's actually that it's the projects that tend to buy their token back with those profits, and they have to have large enough profits. So Hype, for example, like it's over $1 billion like profit rate at the moment, buying into a 45 billion FDV supply, of which like 1/3 or so is or 40% or so is like active in the market right now. So there's actually like significant like 100 million plus level monthly buying that's organic, and that is a forcing function that makes it go up. So the kind of only assets that really go up are not even getting like real capital allocation, but they actually make enough money. Like in some sense, that's how you'd expect the alt bear market to get. If you think of it,
it's more like the stock market, right?
Yeah, you think of it as like a mature market, which is okay. Valuations in the stock market every now and then, like after 2008 or something, drop so low that the earnings themselves, like in some fashion, are really a forcing function in the like supply demand dynamics of the asset. And only assets that are able to do that, that's kind of like very bearish in a sense because there's so few of those assets who are able to do that. But like those assets do stand out, and you but the only road for them, even them, to do a lot better than they have right now is to just get more product market fit. And that's kind of like the most difficult thing. So I think like there's no way, I mean, there could be like a crazy bubble scenario still where everything goes up. And I kind of would expect that to happen when these kind of real businesses, that the product market fit is so large that you kind of drive a new wave of speculative like action just by that. But the fact that they have to do it through that route, it makes it so difficult for the market overall to perform well. So I think we're in this like slow grind of things kind of slowly flat or dying off slowly, and then others kind of like catching the bid, and they catch the bid like, but they just have to become a lot bigger. Like Aave has to be like triple the market size, and then like the Aave buy pressure looks pretty good from there, but it does have to like grow for that to happen. So we still are kind of like, a lot of these protocols are in a good way. Like if you look at something like Euler, there's 2 billion of assets supplied there, and the market cap is like 200 million. So if you kind of take that dynamic and count out the earnings, like it starts to look pretty good, but it's still not like, oh, it's so crazy cheap that it's going to buy its supply back in like 3 years or something. I think you really need those kinds of dynamics where, okay, we're able to buy our supply back in 3 years. That's a real forcing function, and the TVL goes up, and we have like real product market fit, and that's how we kind of go forward from here. So I'd say it's going to be a slow grind, and it's going to be like the kind of getting out of the internet bubble in some sense, and we're kind of running that playbook again.
Yeah, one like interesting thing as well is if you like just browsing through different charts, the kind of timing of the peak is not in lockstep in the way that it sort of used to always be. Where like in past bull markets, you would basically browse through any chart in the top 100 and they would look pretty much the same for the past, like, they would go up around the same time and they would crash around the same time. And that's not quite true. That might have something to do with just like the timings of the different launches and things like that. But there does seem to be like a difference in that as well, where like they just can't. There's just something about it, which is like they're not all trading like as one blob anymore in the way that I think they used to be. And maybe this is because like project like founders and people who are building these things kind of figured that out, and they're trying to like switch kind of the game they're playing, and so they're like intentionally trying to create dynamics that look a bit different. But yeah, it's pretty strange.
From the investor perspective.
I don't think that's it.
I think like this is the scenario where if crypto is actually like useful in the world and all like this stuff happens on chain, like there seems to be a path here from 6 years from now where there were 12 assets on the market that you should have bought, because those are the 12 core pillar assets that kind of drive 95% of the returns. And the investors who bought that will just like outperform everyone else by a large margin. They'll outperform the venture market. They'll outperform like people who kind of in crypto, like people, I think asset selection skills are very, very low because the feedback loop has been so positive for just buying the assets overall that the rigor of analysis is pretty poor. And then I also think like it's not something that TradFi people can necessarily do either because the market is so strange to them overall. But like I think the kind of crypto native people who are able to recognize and find those like 12 assets, they are the ones who will kind of like they will be winners. And there's like almost no expectation in the sense in the market that there will be like those kind of 12 assets that really drive the returns. No one's behaving like that. Everyone is behaving like, oh yeah, we'll do the venture cycle again, and we'll kind of run this playbook where we invest at 20 million FDV, and then we get into the market and we hope to get out of it at like 200 mil FDV or whatever. Like everyone's still playing that game. That game seems to be overcrowded. So the right game to be playing is to think like, okay, what are the growth assets here that will actually generate 95% of the returns? And if you're positive on the industry, like that's how you should view it. But somehow almost no one in the industry still does. So I think that's a tremendous opportunity for the right fund manager.
But in true, and for the right like individual investor as well, of course. But the not investment advice, of course, just to make sure. But what has gotten more difficult, I think. So in the past, like I agree with you. Like you want to like find kind of the right assets, but in the past it's been pretty easy to get them at a good price. Like you just wait essentially until the price drops 90%, and then you're like, this is fine. you know. And now that is harder. Like it's much harder, I think. And maybe it kind of like goes, maybe it reverts back to something that sort of resembles, like maybe this is just sort of like a decoupling with Bitcoin, and then once that sort of solidifies, then markets start to behave in the same way, but maybe not. And the dynamics do make it much harder to sort of understand where in the cycle we are, which makes it much harder to kind of make a buy or sell decision. So
yeah, that's definitely true. That you don't quite have the bottom nuke like kind of thing that you used to have. But what you do have, I think, is like the kind of Sol trade from this cycle being 10 times better than the ETH trade. That was a huge dispersion of returns within the industry, and with it for investors, like fund managers, individual investors, like that was a huge dispersion of returns actually that happened already. And I think that will just happen over and over kind of again here. But you're right that what made the Sol trade even easier in some, or it was very difficult to make because not a lot of people made it, but what made it easier in some sense was you got the classic kind of nuke before that, and now you're more buying these assets in this weird sideways period, and you're hoping that they don't like significantly down while like trying to find the ones that could re-rate significantly up. So it's the same dynamic of asset selection which still applies, but the PA itself is like a little bit less friendly to you, which it should be if there are those growth winners. Like the market shouldn't give you an opportunity either from here to like there's a protocol with 2 billion of TVL, like Euler, like the market shouldn't, if that product market fit is real and actually sticky, the market just shouldn't give you an opportunity to buy that thing at 40 mil either. Like, you know what I mean? Like the market, it would be too easy if the market gave you that opportunity almost.
That, like, so I agree that's not like in theory markets should be efficient, but like if the market doesn't give me opportunities to buy Euler or whatever the fuck else, you know, for very cheap, I'll be really bummed. Like I thought that was a great way for the market to function.
Oh, the way the world is going, we may get a scare up, Teemu. So yeah, who knows? You might get it.
Yeah, it's possible, but it's also maybe to take the other side of view of that is that if one of these things becomes like the backbone really for a real large scale lending in this world, like your returns are still 100x from here, you know, in a scenario.
I'm joking. Like I'm okay with the market making it a little bit harder for me to make money. But to Ricardo's point, one thing that I did think was interesting was how little the market reacted to like an escalation in the Iran Israel thing.
Not only an escalation. I mean, there was an escalation, then the US came in, then they declared a truce, then the market started bounding, then both broke the truce or the ceasefire or whatever it had been. And the markets are like, whatever, we're done freaking out. And not only they were done freaking out,
the US is like dicking around in the Middle East again. It's like,
but the thing is, I mean, it's not normal. It's not only that they didn't freak out. Like Bitcoin, I think when I last checked, was above where it had opened the week before all this mess started. So it's things are, I don't know, rather weird. But before we go down before we all put our geopolitical experts hats on, which of course we are, I'm actually going to go out on a limb and say that I think some people are waiting for like the wave thing that we used to have before of Bitcoin, then profits rotating to ETH, then they rotate to whatever out thing. I don't think we're ever getting that again. Like and the Coinbase, and the Coinbase Circle, all that stuff is where some of that is going. If you want outsized returns, that's probably the crazy trade people are doing, not all this wave thing. I feel sorry for the people who, I don't know, bought Litecoin hoping that it's going to do a 25x from here. I mean, it may yet surprise us, but I don't think you're going to get those waves ever again.
We just can't go back on supply restriction in a sense. We already we already did it. There's so many coins, like there's no story to tell in some sense that will restrict the supply again. And when you're talking about like bubble type of behavior, it's not about PE, it's about the supply demand dynamics. And then we've already kind of lost that battle. So we have to find another way to dig ourselves out of the hole in the alt market.
Coin market cap tracks 17.6 million tokens. That's quite a lot.
Yeah, and maybe the best example of this, some things have traded sideways, but like a lot of the L2 / new L1 activity is super down only. So it's the kind of Bera, Inisha, like all that kind of stuff is like trending down so very quickly. Those are like everything is down 90% from all-time high in that kind of category. ZK Sync, all that stuff. And that's a good example of that because those are the largest absorbers because the market caps are still pretty large. So they're like the largest absorbers of that kind of extra activity. So it kind of is logical that you see it in them versus like if you look at like DeFi protocols which have done well, like Aave has done well, right? That hasn't absorbed. That hasn't been like an absorber for a long time. It's been like this kind of steady climber for many years when you look at it, like a very, very, very steady climb. So you expect to be on that curve and then kind of find some acceleration points on that curve every now and then when like the industry is kind of hot.
Yeah, I mean, on the L2 front, like, there's this most Ethereum being the most hated asset thing kind of going around. I feel like okay, so L2s, it may be that like they're just not attractive to users for whatever reason. All the users that would go there end up going somewhere else, or the base captures it all. There's like all these things. At the same time, I do feel like they're kind of being a little bit maybe mispriced. Like I haven't like bought any. I hold via Equilibrium, we have a position and some of them like Starknet, but it does feel like if anything, those are at the bottom of like the hype curve or like the Gartner whatever thingy.
Yeah, I think Celestia is a good example of something which seems to be kind of picking up in terms of traction, but it doesn't have the forcing functions within it to kind of succeed. It still has like supply overhang, which it has to work through. But if you want to get like a proper Nuki chart and and buy like a quote unquote low bear market bottom, but you'll only kind of do it locally for that asset because it may not be happening for BTC at the same time. Like something like Celestia, I think would be conceptually a good example of like there's going to be one of these where someone makes an amazing trade and there's like actual product market fit, because actual product market fit matters in the sense that like there is one success of that L2 story and it's hype. It's an L1, but like
hype and base. Hype and base.
Yes, hype and base, exactly. So it's possible to be very successful in that category, and someone will be very successful in that category.
Like if base had a token, it would do really well.
Yeah, exactly.
And so and there is this element of like, okay, like maybe there's like right now almost like too much block space, like that it's sort of an oversupply of block space as well, and that's sort of like the first time. Like it's been the situation maybe for a little while, but not that long. Where like in the past, it was always that we had too little block space. And now we kind of like maybe have a little bit too much. And now we need to kind of like grow the use cases on top more to then get closer to utilizing that. But it also makes new things possible. But I feel like there are these mispricings, which or like I don't know if the L2s are mispriced. I honestly, it's really hard to judge. But there is this like there are these areas which in 5-6 years time we might look back and be like, wow, it was just really early, and like for those types of things, and then they ended up like doing really well, but we'll see. It's hard to judge. To go just to finish off, since I think we need to hop off. Did you guys see there was this news story? I don't even know. Like, I hope this wasn't fake news. Maybe I need to Google it. But apparently, like the Iranian television network was hacked, and it was just playing anti-regime propaganda on all the TVs in Iran.
No, I didn't see that one. I have seen a sampler of the stupid amount of computer-generated propaganda floating around. Like,
no, this is Iran's state TV hijacked mid-broadcast and broadcasting anti-regime propaganda. I thought that was just like the funniest thing. That was very like a very like Hitchhiker's Guide to the Galaxy when the Vogons come and then they just make every surface an amplifier for their announcement that the world is going to get destroyed. It's beautiful. Like that is like the like it somehow makes me happy. Like there's obviously bad things happening all the time there, but it somehow makes me happy that someone goes through the effort of just broadcasting, like hacking an entire TV network to broadcast their own message to everyone. It's very like what happens like in movies or like Mr. Robot, like that kind of stuff.
It's retro propaganda, man. Like the I think that the next step retro back from that would be basically planes that do a flyover and drop flyers, pretty much, which is kind of like
exactly. Yeah. That's exactly what I mean. But yeah, it is a weird moment in many ways, but crypto seems very unfazed, as do the markets. One last point, actually. I think a lot of people might be waiting for a significant increase in M2 money supply, and this kind of relates to generally crypto, but also to Circle, because at least like the Equilibrium research team has done quite a lot of due diligence on this, and basically like crypto prices very much correlate with increases in or decreases in M2 money supply. And one of the best proxies of M2 money supply, because the M2 money supply reporting comes after the fact, like it's a little bit on a delay, is supply of stablecoins. And so if you have a dramatic increase in M2 money supply, like one of the first indicators of that will be an increase in the supply of stablecoins. And then you would also expect like all risk assets to go up. And so that somehow maybe ties into everything, where like it feels kind of like this is the institutional cycle. The institutions probably know this, they are probably expecting the supply to go up, and that's why like there might be this kind of holding pattern right now to see what happens.
I mean, on the crypto side might be again for the traditional market. I'm less surprised by the fact that it is holding up, at the very least, the things like Apple that actually have income. I'm less surprised, because if you're a fund and you're sitting on a lot of money and you see the value of the dollar slipping, or cash is trash, and you're just gonna put somewhere where at the very least you may get some dividends, right? But for like the crypto, like the circles of the world, it definitely is something different.
I think the traditional markets are just as fake, honestly. Like ETFs are above 50% of all the buy volume. Like it has nothing to do with underlying reality. It hasn't had anything to do for a long time.
Oh, that's a nice note in which to close, I think.
All right. Thank you, everyone.
It's all fake. Have fun.
Enjoy.